Hello and welcome back to Katie's Business. This Michael Lapede here. Going to talk to you a little about paying yourself as a business owner. And we'll talk about the difference mostly of salary versus dividends, some basic understanding for you. So one of the most common questions we usually get is, should I pay myself salary or dividends? And it really depends on your situation, but they're usually a combination is usually a good strategy. The answer is not simple, obviously, so there's many factors to continue to think about as you're doing this planning, and it's done on an annual basis, which we'll talk a bit about that here. And also, not only for your taxes currently, but future, cash flow, retirement goals, long-term planning, estate planning, all ties in as well. So the first step in determining the answer to this question is understanding the difference between salary and dividends. We need to understand what the difference is, and so you can understand them to make a better decision. And a salary is really where an employee is paid income from the corporation as an employee, right? So as a director of the corporation maybe, or just as an employee of the corporation, you're getting paid a salary. And that is deducted as a deduction or a tax deduction, right? An expense deduction off from the company to save tax because you're now claiming it as income, full income. They're going to deduct CPP. Of course, if you're the business owner, there's no EI for you or your family members, but CPP they're going to deduct, and income taxes that are going to be remitted to the government. So that's a big difference. A salary, you're paid as an employee, deduction to the company, you're getting the deductions taken off, they're remitted to the government, and then you are getting a T4 at the end of the year, right? And the one nice thing about benefits of salary, the one nice thing we like is it's predictable. It's good for credit, it's predictable numbers. So that's really the benefit of salary. It's not always about saving tax. There's other benefits too as well, right? Now, dividends are payment to shareholders from after the profits, after tax profits. So after the corporation makes its profit, pays its tax, then the dividends are paid. So much different than when the employee or paid as a salary. When you're paid as an employee, you're paid up above where the expenses are, and then you show the profit and pay your tax. Dividends are after the expenses, after the tax, and then we issue the dividends. Okay? Now, dividends are considered passive income, so one of the benefits of salary is you get CPP, you get RSP room, things like that, whereas dividends, you get none of that, but typically you pay lower tax. And the reason why you pay lower tax is because the corporation member paid the tax, part of the tax, before it issues you the dividend. And the government doesn't want to double tax you, so they're going to give you a tax credit for the tax already paid by the corporation, so you pay lower tax personally on the dividend, okay? And dividends will be, at the end of the day, reported on a T5 slip, not a T4 slip. One of the nice things about paying dividends, I will say, there's a lot of benefits from a tax perspective. And again, we talked about some of the benefits of salary, but one of the biggest benefits is it's easier to administer. You're not doing payroll deductions and payroll and T4s and all these things. It's simply, here's how much the dividend is. At the end, I give you T5 for the total, and that's it. So it's much more simpler, right? So here's some factors to consider. Number one, retirement planning. If you really don't have much RSP room, and RSPs are very important to you, you definitely needed some salary in there to give yourself some RSP room. Also, if you think you're going to rely on CPP for retirement, you could check with Service Canada, see where you are today with your CPP, and see if you need to keep putting more money into CPP. And if so, salary may be feasible for that. We can also look at cash flow. Dividends will offer much more flexibility from your cash flow. They can be beneficial when the time is experiencing ups or downs. You can give extra dividends, lower dividends. You can pay yourself later. Much more flexible than a payroll being on salary where you have to pay it out every time. So a lot more flexibility. Another one would be financing needs, right? If you need personal income, lenders will prefer consistent income. So if you are doing wages and salary, normally within 6 months to a year, you can already get some credit. Whereas dividends, you're going to need to show 2 years of consistent history before you're going to do any borrowing. So there is some, again, benefits and drawbacks to each. What we like is an optimal mix of salary and dividends, typically, depending on the situation again, but business owners don't have to choose one or other in this case. They can get the benefits of both worlds potentially. We can even do a low amount of wages where there's no CPP or no tax deductions potentially, and then just give the rest in dividends, and that way you still get the employment tax credit, you get a deduction from the corporation and so forth, right? But a lot of times we'll look at the factors and determine the right tax plan with you. And remember, if your business incorporated, how you pay yourself is very important. You can also use shareholder loans. That's a big factor in your tax planning. Salary and dividends provide unique benefit risks, right? They both provide their unique benefits and risks. So it's important to understand each option, as we've talked about. If you got questions, I want to hear from you. There's no one-size-fits-all solution as well. And, make sure that you have a way to plan this. If you're with us at KD, then you're probably already planning with us, or you should book your time to plan, because that's up to you to book and do that planning. And if you have a different account, well, you should be booking time to plan and look at that dividends versus salary, wages. Look at if you want employee versus shareholder benefits. There's various things to look at to maximize your plan. So that's about it for this video. If you want to hear more, we'd love to hear from you. Post in the comments below, and we'll look forward to seeing you in the next video.